What's up everybody, Nate here, and over the last couple of years we have seen some big changes come for the labor market, from the Great Resignation to the anti-work movement, and now there is massive layoffs and of course unemployment in the labor sector. But unfortunately a lot of this is about to get a whole lot worse. Right now there is a huge railroad strike that could happen in the United States, and this threatens our entire economic recovery because the way that we transfer food, the way that we transfer gasoline, and a lot of products is about to be completely halted, and there really isn't any alternatives. So today I want to talk about what exactly is going on with this railroad strike, what this is going to mean for the economy, and what we can expect to see in terms of inflation and a possible recession in the future. All right, so let's talk about why there is a railroad strike in the first place. So railroad companies from some of the major businesses in the United States are starting to strike because of really poor working conditions. Not only that, they feel like they're being overworked, working 100+ hours every single week, and when they go to take time off, well, they are being denied, and even though they're working all of this additional time, they're not really accruing any sick time or any PTO. There's actually been some times where railroad workers have tried to take time off, or they took unapproved time off for things like sickness or because of the virus, and well, they were actually getting in trouble at work when they got back. So now you have thousands upon thousands of railroad workers who are starting to strike. This means that a lot of the supply chains in the country are about to get hit. There is really only a certain amount of things that we can transfer in a certain amount of ways, and the railroad is one of the ways that we do that. Think of it this way. So there's really only a certain amount of things that can be transferred in one way or another in the United States. For instance, we have the long bed trucks, but right now there is a massive trucker shortage of around 80,000 workers. So we don't have as many truck drivers as we need, and even if we did, they would not be able to supply a lot of the manufacturers with the materials that they need to build products or to ship them to stores. This means that we're going to have a lot less goods for Americans, and it could mean that things like inflation start to go up very soon. The other option would be to send things over the air, so actually put things in a plane, but you can't send cars in a plane. Those things have to be transferred by truck or by railway, and if you can't have either one of those, then all of those supply lines are essentially going to be stopped. The strike right now is imminent, meaning that we could see this strike actually begin within the next few days to the next few weeks, and nobody really knows how long it's going to last for. Economists have said that if it only lasts for a few days, then, well, it's not really going to have that much of an impact on our economy, maybe costing us a couple $1,000,000, but if it lasts for a few weeks to well over a month, this could cost the US economy hundreds of billions of dollars. And like I said, companies are not really prepared for this, so they don't really have any other means to get their things from one place to another, which is a huge problem, and it means that we're going to have a shortage, and it means that inflation is going to go up. But what exactly is going to go up in price? Well, the first thing that we need to talk about is gasoline. Now, you're probably thinking gasoline goes through pipelines, and that's definitely true, but something that is added to gasoline is ethanol. Ethanol is actually transported through our railroad system, and if that's not able to be added to gas, then that gas has to wait. It can't go to consumers until that ethanol is added. That would limit supplies, and it would mean that gas prices start to go way back up in the United States, and Americans spend a large portion of their income on gas. That's part of the reason why we've seen inflation, at least headline inflation, go down over the last couple of months, because gasoline prices and energy prices have been going way down, and energy prices comprise around a third of the consumer price index, the way that we measure inflation on a month-over-month basis. And it's around 300,000 barrels that are moved every single day. So without this ethanol, well, we're not going to be able to supply gas stations with the oil that they need, and that's going to hit other industries that of course use this same gas. Food is probably going to go up as well because there's a lot of grain that is exclusively transported through the railroad system, and grain is something that a lot of farmers use to of course grow their crops. So farmers that sell this grain, well, now they're going to have limited options to where they can actually sell it because they can't transport it across the country, and other farmers that need this grain for their crops, they're not going to be able to get it, which means that could lead to a food shortage. I mentioned before, but cars and trucks. So obviously you can send some cars and trucks over a flatbed truck, but one of the primary ways that we transport cars and trucks is through the railroad system, and we have thousands, if not hundreds of thousands of cars being moved every single day through the railroad system. And if we can't have that, car prices are going to go up, meaning that, well, Americans are not going to be able to buy cars either, and there's going to be a bigger scarcity, leading to a big price hike in new vehicles, but also probably used vehicles once again, because people are now turning to used vehicles because they simply can't get their hands on a new one. In general, consumer goods, trucks and cars and grains and other farming equipment, well, they're just not going to be able to be sent across the country, meaning all of these things from, say, the west side or the east side are not going to be able to meet up in the middle in order to get a lot of our factories to manufacture new goods, leading to, again, a shortage in supply. And finally, one of the more interesting things about this strike is it also affects Amtrak. Now, Amtrak is a commuter train, which means people actually use this for travel, and it's one of the ways that people have been escaping the incredibly high prices for airline tickets and other travel over this summer. They're not going to be able to do that because Amtrak is already canceling thousands of its routes every single day because it simply doesn't have the personnel to run these trains. That means people are not going to be able to get places cheaply, and it means that, well, travel is just going to go down in the United States. Now, what exactly does this all mean for our economy? Well, the primary thing that you need to take away is that inflation is probably going to go up, meaning that prices are going to go up too. We don't know how long this is going to affect inflation for because it depends on how long this strike actually lasts for. If we see a really long and prolonged strike, well, then that means that inflation and the prices for goods and services in the United States are definitely going to go up for a prolonged period of time, meaning that Americans are going to have to spend a whole lot more in order to get the same exact things. That's going to create sort of this wage price spiral, right? Because now Americans don't have the money that they need in order to buy goods and services as inflation just continues to go up. So what exactly happens? Well, businesses start to pay people a whole lot more so that way they can afford more, but eventually people will start buying more, but businesses, if we continue to have supply chain problems, will not have the supply in order to meet demand, meaning they have to make more, and if they have to do that, that's going to come at a significant cost to them, and they're going to pass those costs down to the consumer. Once again, the consumer won't have enough money, so businesses will have to raise their wages. This is called the wage price spiral, and it can get out of hand if prices are not controlled in your economy. It also means that the Federal Reserve is going to have a really difficult time with inflation and its battle with inflation. Now, the Federal Reserve has been raising its interest rates all year in order to battle inflation and bring down demand. They want to raise their interest rates, making it harder for people to get a mortgage, making it harder for people to borrow money and spend on credit cards. We've had way too much money circulating throughout our economy, and now with demand coming down, hopefully that means prices can get back to normal because people aren't buying as much. The Fed, in doing that, is going to restrict our economy, and what that means is a lot less business investment because investors and people just in general cannot invest in companies as easily as they could over the last couple of years. Debt is really expensive to take on with interest rates going up, so investors just aren't going to do it, meaning these businesses, even though they have demand to meet, are not going to be able to meet it because they don't have the funds. And with people buying less because inflation is going up, well, that means that companies are going to start failing, and they have to figure out ways to survive, and one of the ways that they do that is by firing people or laying people off. This whole railroad strike is going to accelerate that problem in the United States. Now, don't get me wrong, the problems that the railroad employees are having should have never happened in the first place. A company should not be working its employees to the bone like this, even if it is because they're short-staffed in general. It's on the company to kind of figure out a way around that without killing the employees that they currently have. Because you got to think of it this way, if the railroad company just hires more people, well, then that's going to increase inflation because now they have more people that they have to pay, eating into profits. But if the railroad company just doesn't hire anyone and forces all of these terms on the existing employees, then they're just going to quit or go on strike, and that causes the same exact problem. So eventually the workers are going to win here. So why not just treat your workers fairly and kind of meet them in the middle with what they want? And like I mentioned at the beginning of this video, this is not unique to the railroad companies. This is something that has been going on over the last couple of years, and I think that it's really exploded because of the pandemic. Millions of people were out of work over the last couple of years, and they figured out what really matters to them. And they want to work at a job where they're appreciated, and they want to feel valued in a team, and a lot of companies haven't really been giving that for a very long time because there was no real reason to. They were paying you for a job, and you did that job, job and that was all. But now we've sort of had this great awakening when it comes to the labor market, and that means that everything is changing between the employer and employee relationship. We're most likely going to continue to see strikes similar to this one in the future too. We saw one with the Truckers Association earlier this year with exactly the same situation because there was a lack of workers, a lack of pay, and well, they were getting overworked, so a lot of them quit or they renegotiated their contracts. That's probably going to continue to happen in the United States as workers continue to get the upper hand and realize what is most important to them. That means our economy is going to be pretty fragile as the labor market is pretty fragile in the United States, and it's going to continue to be that way until these companies kind of get with the times. But now I want to hear from you on this issue. What do you think about this railroad strike in the United States? Do you think it's something that is going to cause some massive concern for our economy, or do you think that it's going to go away and these companies are going to work with the employees in order to avoid a strike? Whatever your thoughts are, leave a comment below before you go. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you want to stay up to date with all the top business and financial news from around the country, our team puts together a free daily newsletter, and you can subscribe to it by clicking the link in this corner right here. And if you want to stay up to date with me and everything else happening in the business and financial world, I'm putting out updates 7 days a week over here on this channel, and I've actually got another one ready for you right here, so be sure to check that out before you go. That is it for me, everybody. Be kind out there, and I'll see you all in the next one.